Hello and welcome back to the Geordie Pig Investor channel. Today we're going to have a look at, is Legal & General stock a buy right now? What is Legal & General? Stock ticker LGEN. Legal & General Group plc is a prominent financial services company headquartered in London. It is one of the largest financial institutes in the world which operates across insurance, investment management, pensions and real estate. They're one of the biggest dividend payers in the UK and have paid a big dividend for many years now and actually have a fairly good dividend yield, which we will get into right now. Having a look at the key stats of Legal & General. They are based in the United Kingdom. They are mainly part of the insurance industry. They have a market cap of 13.8 billion. They went public in 1979, have over 10,000 employees, have a very healthy dividend growth streak at 9 years, alongside that 5-year dividend growth rate at 4.25%. And as I mentioned, they have one of the biggest dividend yields in the UK at a whopping 8.88%. And if you have a look over the last 12 months, you can see they're actually down 10.31%. So in today's video, we're going to dive a little bit further, see what they are actually valued at and if they are a buy right now. Having a little look at Legal & General's earnings call. Legal & General's recent earnings call highlighted a strong performance in its institutional retirement division, underpinned by record pension risk transfer business. The company remains optimistic about its 5-year growth targets, which guidance indicates 6 to 9% of compound annual growth in operating earnings per share through 2027. This will be driven by robust capital generation and a focus on sustainable growth. While challenges in the asset management division impacted performance, with operating profits declining due to market volatility, Legal & General's diversified business model demonstrates resilience. Management emphasises the strengths of its UK and international pension business, noting a favourable outlook for PRT growth in the UK, US and other markets. The company has also introduced share buybacks alongside its consistent dividend policy, signalling confidence in its capital position and shareholder returns. The earnings call also reflected a broader strategic pivot under the new leadership, with plans to streamline operations and enhance focus on growth areas like asset management and retail finance services. Fundamental analysis. They have a positive free cash flow at plus 2.2 billion. They also have positive net income at 292 million. Positive operating income at 2.5 billion, positive 3-year average ROE at 14%, exceptional 1-year revenue growth, very good long-term solvency. They do have an average debt to equity at about 1.53, a good Altman Z-score at 3.03, average short-term solvency, and they do have positive net debt at 28.3 billion, but that is very common for these types of companies, so it's not something that I would be overly concerned about when you actually have a look at the bigger picture. Looking a little closer at Legal & General's free cash flow. Free cash flow is the money a company has left over after it pays for all of its expenses and any investments it needs to make to keep the company running smoothly. Free cash flow has a massive impact on the direction a company may be heading, and from this graph below we can see Legal & General's free cash flow over the last 10 years. On the right hand side I'm also showing you the FCF payout ratio and how you'd actually work out a different payout ratio for a specific company. From the graph you can see it highlights the significant fluctuations in their cash flows, showcasing periods of high cash flow generations as well as substantial deficits. This is usually a red flag when looking into buying a company, as you want to see a stable, steady increasing free cash flow. Having said this though, with Legal & General, they do have a very nice FCF payout ratio right now at only 56%. And they do pay that massive 8% yield and are back into the positive compared to last year, so they have had a much stronger year compared to 2023. So we're going to have to see how the free cash flow starts to play out over the next couple of years, and if they can start to continue growing it, then that will be a better sign. But if it was to continue fluctuating quite a lot and bouncing between green and red, or potentially staying in the red for the long term, then that would be where I would have a big red flag and potentially look to sell out of my current position in the company. Legal & General's relative valuation. Relative valuation is a method used to value a company by comparing it to other competitors based on certain metrics. The metrics it includes is EV to revenue, EV to EBITDA, and PE ratios. When plugging in my numbers for Legal & General, on the worst case scenario, they were valued at 264.57 GBX. On the base case, they were worth 305.29 GBX. And on the best case, they were worth 406.87 GBX. Not only do I look at the relative valuation for this company, but I also look at the Wall Street estimates. Wall Street estimates are an average estimation of a public company's quarterly earnings and revenues that lead to a valuation of that particular company. On the worst case scenario, they believe Legal & General will be worth 222 GBX, which would be a 1% downside on that current price. On the average case, they believe that Legal & General will be worth 270 GBX, which would actually be a 20% upside on that current price. And in the best case over the next year, they believe that Legal & General could be worth 351 GBX, which would be a 56% upside on that current price. So, with Legal & General's price being £2.25, let's have a little look, combine our different results and find our best, average and worst case scenarios for Legal & General and see if they are currently trading at an attractive price. On the worst case, I believe Legal & General would be worth £2.43. So with a 10% margin of safety on this price, you'd be looking to buy it at £2.19. And with a 20% margin of safety on this price, you'd be looking to buy it at £1.95. Average case, Legal & General would be worth £2.88. Meaning with a 10% margin of safety on the average case price, you'd be looking to buy at £2.59. And with a 20% margin of safety on the average case price, you'd be looking to buy a Legal & General at £2.30, which is right around where that current price is, as I just mentioned before, at £2.25. On the best case price, they believe Legal & General would actually be worth £3.79. So with a 10% margin of safety, you'd be looking to buy Legal & General at £3.41. And with a 20% margin of safety, you'd be looking to buy them at about £3.03. The conclusion for Legal & General. Is Legal & General stock a buy now? I think that right now, Legal & General is at a relatively attractive price. Given the undervaluation based on my overall valuation of the company, looking at my average case price like I highlighted before, with that 20% margin of safety put in place, it was still undervalued. And their strong financial performance and attractive dividend yield, Legal & General may be a buy for the long-term investors, especially those seeking income and growth potential. However, investors still need to consider broader market conditions and personal risk tolerance before making any decisions. It could be particularly attractive if you believe in the company's long-term prospects and are looking for an income-generating investment. To add to this, they currently have a healthy FCF ratio, and if held within an ISA, you will receive the great tax-free benefits as a UK investor. Personally, I do own this stock in my portfolio, and I do very much like it at around about that £2.20 mark. Do you own Legal & General in your current portfolio? Let me know in the comment section down below. I hope you enjoyed today's video. Let me know of any other stocks you want to see a breakdown on. Thanks for watching. Please like and subscribe. This is the Geordie Pig Investor. Over and out.